Here in just a few short days, on Wednesday, September 17th at 2 p.m. Eastern, the Fed is lining up for its very first interest rate cut since 2024. Now, a lot of people are worried or uncertain about what happens next, considering we already expect interest rates to be cut by 25 basis points. And because this is an expectation, and because the Fed's done too little too late, it's not actually going to move the needle. However, I can't tell you more why that is wrong. At least historically speaking, since 1980, 100% of every single time that we've had a Fed rate cut, with the S&P 500 at record highs, they have led to more record highs 12 months later. This is actually going to be a very positive development for markets, according to the Kobisi letter. Now, layer that in with the AI boom that's early. Demand is exploding. Compute is going to continue to climb off the charts. And you've got rocket fuel mixing with this lit match, because big tech isn't slowing down. And they're not just talking about AI, they're actually spending for it in the triple digit billions per quarter. Major companies and investors like Apple, SoftBank, OpenAI in partnership with Microsoft, Nvidia, Micron, IBM, Johnson & Johnson, and the list goes on, are pledging to invest hundreds of billions of dollars in US growth, US manufacturing, the AI boom, and the majority of this money is going to find its way in rotation through the stocks of these companies, which will be large drivers of the US economy, the market, and a lot of this will rotate into crypto. If the stock market's doing well, crypto's likely in a good place to do well also. So what does this mean for crypto, and more specifically XRP? Well, again, we're going to experience more economic activity through lower interest rates, plus a once in a generation tech build out through these many hundreds of billions of dollars. So imagine all of that liquidity flowing into the market, creating real growth, jobs, fueling demand, and much of this will spill into the crypto market. Now, in the case of XRP, as we see an accelerated economy, there will be more payments, which will require better networks, lower fees, a trustworthy system for global remittances, and ultimately every single one of these companies is looking for true compliance and trust, something that Ripple has worked very hard to accomplish. So it's starting to look less and less speculative and more like the backbone for all of these cash flows in this AI tech boom. So stick with me, because I'll show you the major signals to keep a close eye on and the XRP specific catalyst hiding in plain sight, what you want to watch out for in the news and on the charts. And by the end, you'll know exactly why this combo could push crypto past prior peaks and how to position before the crowd figures it out. Also, if you've been wanting to invest in crypto through your very own self-directed tax advantage IRA or Roth, check out itrustcapital.com/bullrunners. You can find that link in the description below to get started and get a $100 bonus. And by the way, if you already have an IRA or a Roth IRA with another provider, but want access to far more cryptos like the ones you see down below, anything like Chainlink, Sui, HBAR, even meme coins like Pepe, or real world asset companies that are building the future of RWA like Ondo, then you can start investing in those in your tax advantaged IRA through iTrust Capital. Again, link is in the description below. Now, what makes these guys absolutely wonderful is the fact that it's a US based company where you're in full control. In other words, if you call customer support, they're not going to do any high pressure sales pitch where you've got to put your money into another account where they earn more fees. It's very direct, very straightforward. Their assets are held one-to-one off their balance sheet. So essentially, they do not use your assets to lend, to borrow, or even use it as leverage into any one of their other businesses. Also, their fees are extremely low, and there is no monthly fee or account setup fee. So really, you can just roll over your IRA if you already have one, or start a brand new one right here at iTrust Capital. And be sure to click that link below and then enter the code BULLRUN9 when you get started, and you will receive a $100 bonus for doing so. Now let's dive into the video, and as always, my friend, if you're feeling blessed and bullish, comment 777, and if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the YouTube channel. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDefi, PauliDefi. Here we have the man behind the Kobisi letter, Adam Kobisi, sharing that the Fed is about to add rocket fuel to the fire, and that 100% of the time, going back to 1980, whenever we experience a rate cut with the S&P also at record highs, we will cover this, we actually see the market climb even higher over the next 12 months. And this is something that's quite interesting because it's what we've been covering on the channel and with our members over at Altcoin Pro University, that this might be the very first deviation from our typical 4-year cycle. Now, I'm not saying that we're not going to see another rally or the bull market explode through the end of the year. What I am saying is that potentially 12 months later, by September, October, November, December of 2026, we could even see higher highs. And in typical situations, we would actually have been well into the bear market by then. But that might not be the case this time around. With interest rates lower, we might see an increase in M2, and there has been a pretty strong correlation between the M2 money supply or money supply growing, which is ultimately inflationary, but a lot of that value finds its way into risk on asset classes like the stock market and crypto. So not to mention this time around, we are in the midst of the AI revolution, which is barely in its second inning. And this is another major catalyst to potentially push cryptos and stocks to new all-time highs. As the Magnificent Seven companies alone, think about that, just the biggest companies are investing $100 billion plus per quarter. Now, I know $100 billion doesn't sound like much these days when the Fed's tossing around trillion here, a trillion there, you know, we're approving it in Congress, you name it. But at the end of the day, when it comes to real value and growth, $100 billion investment from any company is absolutely insane. And that this will create the biggest technological revolution in history since the dawn of the internet. Here we have an image of the data that proves that when the Fed cuts rates within 2% of S&P 500 all-time highs, the market loves it. In 20 of the last 20 times this happened, the S&P has gone higher. And by the way, the S&P going higher is very positive and bullish for crypto markets. I've never seen a situation in all of my crypto investing and history where the S&P was in a short-term bear market, as in like 2022, where crypto didn't also absolutely get wrecked. So we need both of these risk-on asset classes to be in a very healthy economic environment. And yes, the AI boom is huge, as Trump has de-incentivized many companies to do business and any new AI technology investments outside of the United States. So we have Apple announced a $600 billion investment in US manufacturing and workforce training to bring their supply chain back into the United States. And here directly from Apple on February 24th, you can see that that's the case. Well, a lot of this money is already finding its way into the US economy, and they're expanding in Michigan, Texas, California, Arizona, Iowa, Nevada, Oregon, North Carolina, Washington. And you have to think about just how large of an investment this truly is, as not only does it bring higher wages and jobs back in the United States, but that's going to stimulate those local economies and a national economy, because a lot of people spend money online now. So when people actually have access to disposable income, they tend to spend it on a wide variety of goods and services, which again is good for the velocity of money in the economy. And what's crazier is that the fact that this is committed over the next 4 years, which is a very short period of time. It's kind of like an NBA contract. They're going to have 2.9 million jobs being supported and 20,000 new Apple hires in the next 4 years, with another 24 factories. Then we have another player like Nvidia ready to manufacture American-made AI supercomputers in the United States for the very first time. This came in April 14th. Well, now all of this stuff is actually going down. Everything is actually being worked on. A lot of this money is finding its way into the economy with a rate cut, which is going to incentivize more borrowing. And again, a lot of that money finds its way into the creation of jobs, into the creation of new businesses, and even incentivizes new home ownership or investors to buy more homes. While the stock market is at record highs, this is looking to be very good. So when it comes to Nvidia, within the next 4 years, Nvidia plans to produce up to $500 billion of AI infrastructure. So think about it. In 4 years, we really don't know where the market's going to be. Nobody does. But with this much spending and potential growth and lower interest rates to boot, while markets at our all-time highs, this could just drive FOMO to levels you've never seen before. So even if we experience a bit of a lull or a sell-off or a very short-term bear market in the next 4 years, I think the next 4 years are going to be one of the greatest 4 economic years in American history if this all goes down according to plan. Nvidia plans to produce up to $500 billion of AI infrastructure in the United States through partnerships, and also they will be manufacturing Nvidia AI chips and supercomputers for American AI factories, which is expected to create hundreds of thousands of jobs. Think about that. Hundreds of thousands of jobs, and drive trillions of dollars in economic security over the coming decades. In terms of their actual investment, we're talking $500 billion in US-based AI infrastructure over those next 4 years. Then you have another major one through Microsoft and OpenAI and SoftBank, titled the Stargate project. This is again directly in a press release from OpenAI itself. And the Stargate project has pledged $500 billion again over the next 4 years, building out new AI infrastructure. Now, the reality is, why do we keep seeing this 4-year plan? Well, this is because the AI race is on. Most of these companies can simply not get enough chips. They can't simply get enough of that economic growth when it comes to who's going to win the AI race and become essentially the next Google of search engines in the case of AI. The whole world will eventually run on AI, and no company will be able to operate without it. So if they don't do it within the next 4 years and someone else is, that's going to be a big issue. So yes, the investment needs to be huge. Yes, they need to deploy that capital rapidly. They can't just talk about it. And yes, they're going to have to do it in the United States, because otherwise they're going to be taxed heavily by the Trump administration. So all of this is ultimately going to be very good for the US economy, for the stock market, for crypto, and already they're deploying $100 billion immediately. And again, we have to think about this. If they're going to deploy $500 billion, they're going to have to do this quarter by quarter by quarter. Sometimes it'll be month by month by month, but it doesn't even stop there, as Meta, or Mark Zuckerberg's company Facebook, also pledged $600 billion at a White House dinner earlier this month. And this is one of the latest articles talking about how they're going to do it through 2028. So these companies, they're not playing around. All of this money is totally going to stimulate the growth of the stock market and the US economy, creating lots of jobs. And yes, the crypto market stands to benefit greatly from it. Now, as we continue to look down this list, you have names like Amazon, you have names like Google, Blackstone, energy companies, pharmaceutical companies, you name it. But one of the largest investments is going to be directly from the UAE, who actually picked the US over Beijing in this global arms race to win in the AI sector. And they plan to invest $1.4 trillion in the United States. Again, the money's just not slowing down. And no matter what anyone says, love him or hate him, none of this would have been happening to the same degree. These companies would have not had the same incentive if it weren't for Donald Trump basically forcing their hand into US manufacturing and bringing back those jobs into the United States. So if there's one thing he's done extremely effectively, it's forced the hands of these major companies to start playing ball back on US soil. So it all really comes down to what occurs on September 17th, with the FOMC statement and the interest rate decision. Now, again, we have to understand that we're currently sitting at 4.5% or 450 basis points. We're expected to cut at 25 basis points. That is the expectation, which means I don't think the market's going to rally like crazy if we hit expectations. Either way, this will be a positive development for the markets. If we come in lower, let's say 4%, or we cut 50 basis points. If the market responds and reacts well to that situation, then that will be a very positive sign for the markets, but it's also an indicator that something is truly wrong with the economy and that the Fed is more worried than they led people on to believe. That alone might signal a bit of panic. So that said, I don't think they're going to cut at 50 basis points. I think they're going to stick within expectations that will keep the markets pretty happy, looking healthy. Yes, the stock market's still at all-time highs, even with unemployment rising and those job revisions that we've recently covered. But I'll be covering this on the channel either way when it occurs. So that said, what we're going to do is dive on over into the charts. But before I do, head on over to Altcoin Pro University for access to your one-stop shop crypto education platform. We offer everything from courses to live calls to altcoin picks, DeFi yields where you can put your crypto to work for you, how to take advantage of all of the upcoming airdrops, which is essentially free money. The last one that I got was worth $6,500. And of course, to join in on our technical analysis calls that I host every single Tuesday live, and I can teach you step by step how to approach a chart, how to think about it, how to take advantage of what I call the 4 horsemen of technical analysis, and ultimately feel confident and comfortable when you place trade based on key supports, breakout zones, pivot points, and more. So if any or all of that sounds interesting to you and you want to take full advantage of this bull market cycle and potentially even become a crypto millionaire, then head on over to altcoinpro.com. You can find the link in the description below. And now let's dive into the charts. So as you can see here, we've been covering a lot on the S&P 500, and yes, even this dip from 6,100 down to 4,800 got bought back up in rapid fashion. Now, you have to understand I am on a monthly time frame. This is a very long-term time frame, but this chart right here is indicative of serious strength in markets, or better yet, months where markets don't look too hot. So now we are back into new all-time high territory, and even this slight dip off of the local highs got eaten up. Even with this bearish or red candle, you can see that we're putting in no new lows, and we just put in a new all-time high at the open of the market this morning. So things are looking extremely healthy and good on the S&P side into a rate cut, which leads me to believe that that Kobeissi letter will track, that ultimately 12 months from now, markets are going to look even better. So now let's go ahead and take a look at something like XRP. So right now we are still above our downward trend line or descending wedge. You can see that we experienced a breakout coming into September 8th of this year. And since that point in time, we rallied to a local high of about 320 before seeing the next few days sell off a bit. But not only that, we are still above the 10 and 20 EMA, seeing a support at the 20 EMA with a new local high just above our prior high right here at 312 and 307. So although we are currently below these ranges, I am liking the price action. I'm liking the fact that we're above the descending wedge, the fact that we put in a new high, the fact that we're being supported at the 10 and 20 EMA. So this is looking like a very normal and healthy retrace. As long as we can remain above the $3 range, things are going to be totally fine on an XRP play. And this is actually where I'm adding to my position on a dip. Now, when I go ahead and take a horizontal support and resistance line, and again, I like to use the box tool, and I could drag this all the way back into the past, going into, let's say, a weekly time frame, you can see that right here, we also have a lot of resistance that occurred in December of 2024, February of 2025, which then became a support in September of 2025, yes, a year later. And on the weekly time frame, we are still being supported at that 20 EMA on XRP. If I were to zoom all the way out and drag this years back to 2017, you can see that this would be our actual resistance on a weekly time frame with the candle closes. So yes, things are still looking pretty good for XRP. The dip got bought right back up here. We are now back into healthy territory, and any break above 320 is likely going to take us at least to 345 and beyond. Anything above our prior all-time high of $3.66, sky is the limit, as it's thin air where there is no overhead resistance. And so it really just comes down to liquidity. How much liquidity is actually available on exchanges? If the demand far exceeds the supply, then yes, the price could easily fly right through $5. So it remains to be seen what occurs there. We're going to be covering it closely. But with this AI boom, with lower interest rates, with all of this investment in the United States, risk on asset classes like crypto stand to do very well. So from a daily perspective, this looks like a very healthy retrace right before the next move up, and I have been adding to my position. But with that said, that is the end of the video, folks. If you enjoyed it, be sure to subscribe to the channel and also check out altcoinpro.com or go get your Roth IRA started with iTrust Capital. Both of those links will be in the description below. And if you have any questions about any of the things that we offer with the bull runners, you can actually check out our Telegram bot, which will also be linked below, whether it's crypto loans, whether it's Altcoin Pro University, and you simply have questions, whether you want access to the ebook, it's all inside that Telegram bot, and you should be directed in the right direction. Thanks so much for watching the video, and I will see you in the next one. Goodbye.